talking about positives, yesterday we got that surprise rate cut by the RBI of 25 basis points, but the view is that there will be at least another 75 basis points rate cuts through the course of this calendar year. That's the more conservative view. Let's get some of these beneficiaries. Remember, debt-ridden companies will see a huge relief because of this. YD Murthy, the Executive Vice President Finance at Nagarjan Construction, joins us on the phone line from Hyderabad to talk about this. Mr. Murthy, good afternoon and thank you for being with us. If you can just tell us what kind of relief do you expect because of this, the start of the rate cutting cycle? What is the debt on your books currently and how much will your interest costs go down?
Yeah, the rate cut has come as a pleasant surprise and which is somewhat overdue. We are companies in the infra and construction space where debt capital is very important and the cost of capital is also more important because of the high interest rates we have suffered a lot in the recent past, mainly on account of net profit margins have plummeted. So they are almost 1% or even less than that. So this is the direction that the Reserve Bank has taken is a very good positive development for our industry, for our sector, and we hope the further cuts will also be there. And as we go forward, things will improve. And also what is important is how much of the rate cut will be passed on by the bankers, the lenders, to the borrowing companies. That is also very critical. One has to examine and see how things will pan out, but definitely it's a positive thing.
Okay. Mr. Murthy, afternoon. So let's take a hypothetical scenario and assume that the RBI cuts rates by say 100 basis points in this calendar year or 1% and the banks pass it on. Then for NCC, can you tell us with the assumption that your rates have come down by 1%, what can be the benefit to your interest cost? How much will it come down by as well as your debt?
Yeah, it will. You should add at least 25 crores to my bottom line in a full year, based on a debt level of 2,200 crores. And as you know, we have done a rights issue recently, and the debt reduction has already taken place by about 600 crores or so. So that also will impact. And next year, as far as our company is concerned, the profit levels will definitely improve.
Okay, so over this calendar year, sir, how much do you think rates need to be cut for many of yours and the industry's projects to be viable?
See, the Indian economy is a high-cost economy. The cost of capital is very high, particularly the debt capital. It is already hovering around 12-13% for companies like us. We were enjoying interest rates of less than 10% about 5-6 years back, 8-9% or even less. And if the direction that the Reserve Bank has shown, which is a good one, and if it continues, and if we are able to borrow sub 10% levels, that will be excellent for our industry.
So what is the current cost of borrowing for NCC?
The blended cost is around, say, 12.75%.
12. Okay. Could you tell us, sir, what is the current interest coverage ratio for the company? And by the end of the calendar year, if there are some rate cuts, how much do you think it can come down to, or what would you ideally like to bring it down to?
The debt levels, I already mentioned, we have brought it down to 2,200 crores by repaying debt of about 600 crores. The interest coverage ratio after the rights issue is very comfortable, is more than 1, and we are very confident we will be able to maintain that.
Okay. Can you just tell us about what the order pipeline is looking like? I understand that NHAI has put out about 5,000 crores worth of EPC projects for bidding. Have you bid or do you plan to bid for any of those projects at all?
Yeah, we are looking at EPC contracting from NHAI. We can definitely participate. Recently, we bagged an order in Uttar Pradesh of about 1,670 crores. That is the expressway project. It's not NHA, but it is a state government project, EPC contract. So we are already started executing that. There is going to be improvement in the road contract award by NHA. And we are not very keen on BOT projects, but EPC, yes, we can definitely participate.
Okay. So has Q3 been in line with the company's expectations, and how is Q4 looking to you as things stand?
We are confident the top line we can deliver as per expectations, and already for 6 months we have done a top line of almost 3,800 crores. So in a full year, that is third and fourth quarter included, we can reach a top line of about 7,200 crores or so, which is slightly more than the budgeted plan of the company.
Okay. Are you on track to meet your order accrual target? I understand you have a target of 6,500 crores for this fiscal.
Yeah, we are confident. Already we bagged the orders of nearly 6,000 crores in the first 9 months. Okay. And the year as a whole, we will definitely achieve the target.
Okay. Of the 6,000 crore of orders that you won in the first 9 months, how much of it came in Q3, sir?
Q3, I think it's something like 2,000 to 2,500 crores. The exact number is not there, but it will be of the level of around 6,000 crores total for the first 9 months.
Okay. And can you just tell us, in these new orders that you have bagged, what kind of margins are you enjoying? And by the end of the fiscal, where do you see your margin profile at?
Yeah, in fact, there's one good thing that has happened. Along with order accretion, we are seeing good improvement in the EBITDA margins. Okay. Already in the first 6 months of the current year, we have reported EBITDA of about 7.8% as compared to 6.6% last year. And we are confident for the year as a whole current year, we will be able to report EBITDA of about almost 8%.
Okay. Your debt, sir, you said stands at 2,200 crore currently. By the end of this calendar year, how much would you like to pare it down by? Considering that you have, various monetization plans. So what's the internal target on debt reduction now?
I think we remain at 2,200. The focus is on not to increase the debt levels. And also, you will appreciate our top line is increasing, which means we need further capital requirement for achieving the kind of top line, the working capital. But we are confident we will be able to do it through internal accruals rather than increase in the debt levels.
So no monetization plans either of your real estate, your land or your BOT projects, nothing on the block, at least in the first half of the calendar year?
Yeah, we are looking at monetizing 2 road assets. Discussions are going on. Maybe in the next 6 months, we will be able to monetize 1 road asset at least. And also we are looking at some real estate parcels being sold out where the valuations are good. And our subsidiary NCC Urban is planning to repay about 100 crores of debt taken from the parent company.
So through this, how much will you be raising in the next 6 months?
Yeah, it should be, the road asset should give us about 130 to 140 crores and the subsidiary company should give us about 100. So around 240 to 250 crores is expected in the next 6 months.
Okay, and this will be used to pay down your debt, or it will be used for, working capital requirements as well as...
Yeah, it will be used for working capital requirements because the turnovers are expected to increase.
Okay. All right, Mr. Murthy, we leave it at that. All the best for the quarters to come. Thanks for joining us.